when we decided to do this event, we decided to push it back an hour, right? Typically, we do this event at 8 o'clock in the morning. We decided to push it back an hour. And one of the dilemmas with doing so is that you kind of miss that sweet spot of market movement. And where I was talking to our Tier 1 members on our chat this morning, Tier 1, any of you guys catch the patterns that formed this morning? Winner on pound Aussie, winner on pound dollar, winner on euro pound. 3 advanced pattern formations formed right before the live event went off. And I'm just thinking to myself, man, I could have looked like a stud. I could have looked like a genius. But that's the territory. At this point in my trading career, I don't really care about that type of stuff. But it was funny because whenever we talk about something, this could happen, and boom, it does happen. So what we're gonna do today, we're gonna do a little bit of a recap on what we mentioned yesterday, and then we're gonna take a look at some live analysis in the market. The pattern opportunities they're over and done. We can review them a little bit, but I want to show you 2 newer opportunities that are on my radar, including one trade that I'm currently in. But I want to walk you real quick through my pre-market checklist. And this is something that we've given away in the past. It's not fancy at all, but it gives direction. And if you learned anything from yesterday, it's organization is key, right? How many of you guys would consider yourself unorganized? Me. Yeah. Yep. Extremely disorganized, right? Organization is key. It's key not just in trading, it's key in life. One of the things I mentioned, one of the biggest struggles for me just in evolving as a person was having children. And then I had the second one, and that just made things twice as worse. But having children, because I was always a workaholic. I told you guys a story yesterday in the Q&A, I believe. I was always someone that I worked as much as I could. I worked as hard as I could until stuff kind of worked, right? I'm that person that just I keep hitting the hammer against the wall until it breaks. That's kind of my philosophy. Did Max just say you had a kid? I saw congratulations. 2, yeah, congratulations, yeah. When I had kids, or let me say this, when I got into trading, I quit my 3 jobs. I had nothing but 24 hours a day. Let's minus 7 hours for sleep, right? So I had nothing but 17 hours a day to focus on trading. And I worked very, very hard for 17 hours a day. And the more you work at something, the better you get, right? And I became very good, not very quickly, but it certainly helped my learning curve. And same thing with building my businesses. When I had kids, all of a sudden things kind of shifted, right? Because when you have children, what becomes most important? And this was a tough dilemma for me. What's more important? Is it your business? Is it your children? Right? Milk? It's really tough, and it's something I struggled with for a while because obviously the answer should be your children are most important. But at the same time, right, if your business fails, you can't provide for your children, so is your business more important? Because that's what provides for your family? And that's an interesting dilemma. And I used to kind of go back and forth with that, kind of making up excuses on what to spend more time. I have to spend more time on my business and neglect my kids because if my business fails, my kids don't eat. But at the same time, the reason I got into business, right, was to spend time with my kids, freedom of time. I want to be that father that can go to school plays, that can go to school trips, go to, hopefully athletic matches. When my kids get older and they're playing for Everton and they're winning Champions League matches, I want to be able to go to that. You non-supporters. So it was interesting. So organization was, I focused hard for years on just becoming more organized and really on time management, and helped. And that's something that translated into my trading as well. I was listening to my trading mentor, Jason Stapleton, this morning on something he recently posted about advantages and disadvantages. And one of the advantages of being an entrepreneur is that you have freedom of time. What do you think one of the disadvantages is of being a business owner? Because this is what you are as a trader. You are a small business owner. It doesn't matter how big or small an account you're trading, you are a business owner. This is your business. Take pride in that. You are a sole proprietor. stress, dedication, laziness, shortage of time. Let me ask you this. As a business owner, do you have a boss? You don't have a boss, right? So do you have anyone telling you what to do? Do you have anyone checking to making sure you're doing the right things? Is there anyone to hold you accountable? No, right? You can be as lazy as you want to be, right? If you don't want to wake up and go to work, guess what? No one's going to fire you, right? So a lot of it is on you, and that takes a lot of mental discipline. And that's Jason mentioned accountability yesterday about accountability sessions. Why it's one of the most powerful things that we do is because it holds you accountable. If our traders don't see you on the chat in a few days, you best believe you're getting a Skype message or an email like, hey man, where you been at? And that's key. And one of the things that I created for myself was a checklist, a routine, not only just a daily routine of how to run my business, right? Waking up at the same time, doing stuff in the same order. But a checklist and what I need to pay attention to in the market, right? Notes, because I don't have a team of analysts working for me. I don't have 5 or 6 people giving me ideas saying, hey, Keel, $1, powerful support at 109, right? I have to do that by myself. And the more pairs you trade, the bigger your portfolio you deal with, the more difficult that is. However, if you're organized, it is like having that group of analysts, right? You have a checklist in front of you or notes in front of you. It could be on a whiteboard, it can be on your computer, it doesn't matter where they are, a notebook. You have that note in front of you that tells you exactly what to be looking for where. And it just makes everything run so much smoother. So part of my checklist is this, and I'll start off by giving you a little bit of my daily routine. Not the whole thing, so I don't want to bore you, but I wake up about 5 o'clock every morning, between 5 and 5:30. Every once in a while, I try to sneak in a few extra hours of sleep, but typically my body wakes up before my alarm goes off anyway. What do you think the first thing I do when I wake up is? Check the charts, right? And drink coffee? No. Pee? Oh yeah. Well, that is. I mean, yeah. Okay. Technically, yes. Prayer. I do anything unrelated to trading. Sometimes it's stretching. Sometimes it's yoga. Usually it's a bathroom visit, getting some water. But I make sure to take a half an hour after I wake up before I ever look at a chart. Now, aside from any open positions, I will check an open position just to make sure I don't have to manage it or anything like that. But I don't do any analysis. Now, why do you think that is? No one said wrestle a bear. Because I'm not really awake yet. Right? I'm the type that hops out the bed and I'm ready to get after the day. Right? That's me. I jump out of bed, backflip, and just start, going out there and attacking the day. That's kind of just how I operate. But what I've noticed is that although my body is fully awake, my mind is not fully awake. And I used to hop right onto the charts, and I used to make mistakes because my mind is a little bit cloudy, right? So I purposely I take a half an hour to do anything other than trading, just to give my mind a little bit more time to wake up. Very, 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 very important. After I wake up, then it's time to do my analysis. And my analysis time varies. I think a lot of traders believe that. Let me ask you guys this. How long do you think it takes to perform a full round of pre-market analysis? I get up 5 or 5:30, depending on what I did the day before. Depending on how much late night partying I did the day before. That's what traders do, right? Jack says 2 hours. I see 45 minutes, 30 minutes to an hour, 35 minutes, 30, 1 hour, 2 hours, 10 minutes. It can honestly take anywhere between 15 minutes and 30 minutes. Now, was it like this when I first started trading? No. When I first started trading, 1 to 2 hours. Because every time I looked at a chart, I'd look at a chart and then I'd go back to my notes and be like, okay, that is support. All right. Okay, that's a doji. Yep. Right. But because I've become so automated and so comfortable in my trading plan, right? Remember I gave you guys rules for how to identify a trend yesterday? Right? Once again, imagine that on every aspect of your trading. It's either yes or no, black or white. Obviously, there's a little bit of interpretation there, but yes or no, black or white. So right now, I can come onto a chart and right away I can look at it and right away I can tell you if it's a trading opportunity I'm interested in or one I don't care about. So I've basically inserted a filter into my brain where I know what's important to me, I know what's not important to me. And because of that, I'm completely locked in on what matters the most. But something I look at every day is a pre-market checklist. And it basically starts off like this, right? What are my current positions, right? What am I actively involved in, right? I want to pay attention to that because believe it or not, my memory is really, really bad. Some of these swing trading trades, I'll forget I'm in them. I don't know how many of you guys have been like that. I'll be honest with you. Sometimes I'll be in a trade and they'll be stuck in consolidation. It'll be like 4 days on the Aussie dollar and I'll forget I'm in it. So I always want to remind myself, hey, I am in this longer term trade. I am in this longer term trade. I am in this longer term trade. Pair, direction that I'm in, and then any notes, right? Need to manage. Pay attention for unemployment news, whatever may be on the agenda. Below that is news events, right? I am not a fundamental trader. I do not base trades off of fundamental reports. However, I do want to be aware of what's coming out, right? Why do I want to be aware of what's coming out? Shock, spikes in volatility. One, I'll give 2 reasons. One is going to be technical. One is going to be psychological, right? And you guys probably haven't heard the psychological side of it, right? On the technical side, if there's a high impact news event coming out, let's say interest rate decision for the dollar, 2 p.m., FOMC statement, FOMC press conference, interest rate decision, 2 p.m. That is a high impact news event. That is a news event that traditionally, again, let's assume we're expecting a rate hike. That's a news event that will traditionally rock the market. Now, does the market typically move off of rhyme and reason during these events, or does it move off of emotions? It typically moves off of emotions. If you ever watch these events right away, right, it spikes up, it spikes down, it spikes left, it spikes right before it figures itself out, right? That type of movement isn't good for my type of trading. My type of trading is based off probabilities, right? If this, then we're more likely to do that than this. So those are news events that I want to avoid. I don't want to be involved in the market when they're in that type of situation because it doesn't work well with my trading style. So I'd rather stay out of it. So by being aware of what news events are coming out, I can tell myself, hey guys, not trading the dollar today. Hey, make sure I double check all my stops before 2 p.m., right? Protection. Another reason is a psychological element. How many of you guys have traded and then you've seen the market do something crazy and then you freaked out? You're trading something, then all of a sudden the big red candle comes against you and you're like, no. Akil, what happened on the euro dollar at 8:33 this morning? Right? Give me a yes if that's been you. Or type it in. I'm my hand in the air like we're doing this live. Yeah. And what happens is we usually go from a normal stressful state of trading to a state of de-stress, right? I guess we should bring that back a little bit. Does anybody know the difference between stress and de-stress? Stress is normal, right? Imagine, here's the best example I can give, right? I'm from the Northeast, right? So we get snow, we get ice, we get all that fun stuff, right? At some point in the year, you're going to be driving through an ice storm or a snowstorm. You're going to be in your car and the wheels start slipping, right? You guys ever been in that situation? Maybe for you guys that have rain, hydroplaning, right? The car gets away from you. The first time, how do you feel? Are you freaking out? Are you freaking out? Oh, whoa, 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 right? That is a state of de-stress, right? You're freaking out. You don't know what to do. You're panicking. You're just turning the wheel recklessly and whatever. You're panicking. That is de-stress. And typically when you panic, you kind of rely on your natural fight or flight instincts. In the market, that would be maybe revenge trading, right? The market, big green candle, it stops you out. And now you're like, enter long, right? You don't know why you did it. Right? But you did it. You're just like, that's your natural instinct, right? I just lost money. The market's going the opposite direction. Buy it. You're in a state of de-stress, right? You just kind of reacted with no rhyme or reason. Stress is a little bit different. Stress is once you've been driving in the snow and the ice and the rain, you're used to it, and the wheels start slipping underneath you, and you're like, this is normal. Just going to turn it the opposite direction, bounce myself out, right? You're used to it. It's still a stressful situation because you're not in control. There still is the element of danger, but you're handling it. That's a normal trading situation, right? Every trading situation is a situation of stress, right? We are putting money at risk and we have no control over the outcome. I don't know about you. I like control. I don't like flying planes because I don't have control. I know that we're more likely to get into an accident driving a car than on a plane, but guess what? At least I have control in the car. I like control because I can blame myself. So stress versus distress, right? So I want to be aware of these news events because guess what? If I know that a potential high profile news event is coming at 8:30, guess what I can mentally prepare for around 8:30 in the market? Some movement, right? Therefore, if that movement happens, do I then enter a state of distress where I'm freaking out and I revenge trade and I move my stop loss back or I take my targets early? No. Right? I've mentally prepared for it. I've told myself, hey, this could happen. Be aware. Stick to your rules. Prepare for it. Prepare for it. And as I mentioned yesterday, I would always rather be prepared and know what to expect than the unknown. So I always want to have this news event on my watch list. And then we get to the analysis part. The heading went away for some reason, but it doesn't matter. Where I want to list my pairs, right? I want to identify what the higher time frame trend is. I'll typically write down what the lower time frame trend is as well. I'll look at two trends, the underlying trend and the middle trend. We'll talk about that in a little bit. I want to look at key levels of resistance, key levels of support, right? These are basically my projectors, where I predict and project the market to go to, and then any notes I may have. Now, let me ask you guys this question. How many of you guys remember the formula of success that I told you yesterday? What plus what equals what? Type in the entire formula. Come on, let's see how many of you guys are paying attention. Who's really a trader? Who's really focused here? Ryan, my man. There we go. Steven, my man. Gabby, my gal. Consistent analysis plus consistent execution equal consistent results. If we're using our pre-market checklist and going through the same thing each and every day, do you think that counts as consistent analysis? Yep. We've got half of the equation is solved. Now, consistently executing it, that's a different story. We all know that trading psychology is the number one factor. That's a different story. But we got half of it done. And we've even helped our trading psychology by, again, preparing for some of what's to happen. So having a routine is very important. It doesn't matter what your routine is, but you are your business. You need to establish rules for yourself. You can't you can't treat it like a hobby where you wake up anytime, any day, and sometimes you do higher time frame analysis, sometimes you don't. You got to treat it like a business. And we didn't touch on all of it, but obviously this type of organization and routine goes through every aspect of your trading, from your pre-market analysis to your execution to your journaling afterwards. All right. Now, before we get into some of the trades, again, you can see some of the nice pattern trades you have. I got a question yesterday about consolidation, so I want to talk a little bit about that here. So, quick recap. What do we need to determine a trend? Three-point move, right? We have our starting point down here. What's this area called up here? Yep. Initial structure high. What is our retracement called here? Gave you the answer. Yep, retracement or outside return. I never figured out how to. What is this called here? That's what I should have said. Outside return. And then what is this part called up here? This is our new structure high. So we know that after we have this 3-point move, this up, down, up, we have a confirmed trend. We can safely and confidently say that the trend is, don't type in B either. I know you guys want to be slick. We do that all the time in the live room. Like, hey guys, what's the underlying trend in the market? They're like, B. I'm like, If you have no screen, try logging out and logging back in. Yeah, bullish. All right, so here's the tricky part. Let's say the market does something like this. Are we bullish or bearish? Bullish. Okay. Now, what is important about this level down here, the yellow line at the bottom? What will this level tell us? Why is this important? If we were to break this level, what would that mean? Would our trend be intact or would our trend be violated? Violation, well done. Okay. If we were to break this level up here, would this be a sign of continuation or violation? Excuse me. Continuation. Okay, good. I'm very proud of you guys. This is this group's good. Am I right, Stone? Darren, this group is good, man. This is good. Because believe it or not, it's you know we've been doing this for years, and it seems so basic, but this is not easy stuff, especially if you've never learned this before. So I love seeing when people get it. That's good. All right, so we have these levels up here, right? Violation of this level would be continuation. I'll get my screen back on. Vincent said, we learn from you. Well, you know, it's easy to be the best when you learn from the best, Vincent. And I must say that we are the best. We the best. Who? We. So we know that these two levels right here. Sorry. I'm a nut, guys. We're all goofballs here if you haven't caught on to that already. Trading is so stressful, so you got to have fun. I mean, it's so stressful. You gotta have fun, man. It's especially on a losing streak. We love. It's funny. Me and Jason, we always talk to each other doing like losing streaks or missed trades. He brought up the pound Aussie the other day, where we were both waiting for this awesome trade on the pound Aussie, and like we both missed it, and we're just sitting there like, man, we suck right now. But it's how you handle it. But we know that these levels are important. This structure high right here will tell us trend violation. This structure low right here will tell us, this structure high right here will tell us trend continuation, excuse me. This down here will tell us trend violation. Now, if I gave you something like this, this would be a trend violation. Now, if we do this, and we do this, and we do this, and we do this, what is this called? It is almost a cipher, actually. This is what's called consolidation. And consolidation is sideways movement. A better way to think of consolidation is when there is no trend. So if your bullish trend is violated, we're not automatically in a bearish trend. And I suppose I should take a step back and talk about that. If our bullish trend is violated, this doesn't necessarily mean a bearish trend. Why is that? Why does this not necessarily mean a bearish trend? Yeah, because we need that 3-point move. In order to have a confirmed bearish trend, we need something like this to happen. Because now this becomes our starting point. This would become our initial structure low. This would be our outside return. And this would be our new structure low right here. But until we get that 3-point move, we're not in a bullish trend. We're not in a bearish trend. I like to use the term rotation because for me, it means kind of pay attention to a potential change in trend. But we're essentially in consolidation, right? So if the market does something like this, we are in consolidation, which means there is no true trend at the moment. You guys follow me? I'm going to restart my screen real quick just to see if that helps. So give me a second. I hope I don't blow myself up. Screen foe. All right, let me know when the screen's back up. Okay. Yeah. So this is called consolidation. So if you are a trend trader, right, you need to trade within the trend. If the market is in consolidation as a trend trader, what do you think you should be doing? Nothing, right? So this is consolidation. Now, here's where things get a little bit trickier. And it's hard to teach this without going into the whole fractal thing. But we did talk a little bit about yesterday about how there are trends within trends. So hopefully it will make sense. If not, this is something that we covered massively in the Foundation 2 course. So that was the goal, to clear that up. If the market does something like this, how would you guys classify this move? I guess what is the bigger picture? Have we violated the overall trend? We have not. Okay. Why? Why have we not violated the overall trend? Well, because of this up here. Right? Or excuse me, we never violate these lows. So we're still within the bigger bullish trend. However, it would be safe to say that the short-term trend, we're in consolidation, correct? The short-term trend is just moving sideways. So this is something that could happen. Again, that goes back to the whole thing about fractals, how there are trends within trends within trends. Now, when we have the market in these type of conditions, it's very difficult to find trend continuation opportunities, right? You'd want to wait for a breakout. We're going to take a look at a breakout opportunity a little later. But what also exists within these periods of consolidation? Something called advanced pattern formations. And I didn't plan on talking about it this week because in order to do advanced pattern formations, you have to learn Fibonacci's and all that fun stuff. But we had two winners this morning, and I do just want to show you an example and just give you an idea of there are different ways to attack the market. We can attack the market in trending situations, but there are ways to trade consolidation. And it's all based on you as a trader. Right? You as a trader could be someone that says, hey, I only trade trend continuation situations. Therefore, I stay out of the market when it's in consolidation. You could be a trader that says, hey, I only trade consolidation. So I stay out of the market during trend continuation opportunities. You could be a trader that trades both. Right? There are endless ways that you can trade. And the point of this is I want to show you that no matter what the market is doing, if you know the skill of reading a price chart, if you are a well-rounded trader, you can take advantage of every opportunity. Does that mean you're going to win every trade, guys? Heck no. But you can take advantage of opportunities. And depending on what market you trade, there's going to be more or less opportunities on certain directions, right? Typically, stock markets, right, they trend about 70% of the time. You're in consolidation 30% of the time. Forex market, the exact opposite. It trends about 30% of the time. We're in consolidation 70% of the time. So I do think it's important to diversify your trading strategies. But we'll take a look at a few trades I took this morning just to give you an example of what you can look for in consolidation. And then we're going to take a look at one that I'm currently in, which is a reversal trade, and one that could be a trend continuation trade. So hopefully it gives you kind of an idea of what to look at here, or an idea of just the different ways you can attack the markets. But let's start on here on the pound dollar. And I'm on the 60-minute time frame. We're not going to do a full IPDE top-down analysis on this one, again, because I just want to show you guys what has happened here. But you can see that the market is in consolidation, right? We're kind of just going sideways. Would you guys agree? Choppy movement. We're in just up, down, up, down, up, down, up, down, right? When the market makes these types of ebbs and flows, right, you get a few things that happen. We actually had back-to-back winners here as well because we had one last week, as 2 on pound dollar. But you get the market putting in moves like this, where we go down, where we go up, where we go down, and it looks like a bunch of junk. But what is this right here? Not a cipher. This is going to be an advanced pattern formation, right? This is going to be a Gartley formation. It was actually more down here. That is a tradable pattern. And again, if you guys aren't getting this, we're not teaching this right now, so I don't want you guys going crazy. I just want to, the point is, I want to show you that there are opportunities within consolidation. This morning we had something else. Who can see it? Perhaps some of you guys took it. Swing low to swing high, X to A to B, B to C, C to D right here. Another Gartley pattern. First target winner. Entries are right here. Original targets were up here. We had to roll them. That's how we get down with Gartley patterns or advanced pattern formations to our 382. If you're front running, you were taken out. If you're not front running, you might have missed it. But a nice pattern formation there. We had the same thing on the pound Aussie. You can see my notes still on my chart. Boom. Market is in a choppy, nasty state, right? Look at this. How many of you guys would just leave this alone and be like, bunch of junk? Yeah. But the point is, when you know what to look for within these periods of consolidation, they actually present really, really good gems. I'll do one more, and then we'll get to some analysis. But here was a good example of the euro dollar, right? The euro dollar last week, or 2 weeks ago, was driving us nuts. We had what we thought was going to be a breakout pattern, which ended up breaking out to the bottom side. But would you guys look at this junk right here as consolidation? Yep. What if I tell you there were 4 profitable pattern formations in here? These are trading strategies, Don. So the 2 were actually trades I took this morning. There's one right now that I'm live and I'm holding off for a bigger move. Yeah. Advanced patterns all within here. Cipher pattern right here. I didn't have this as a Gartley, but a bunch of our live room members had this as a Gartley. We don't always see eye to eye, but whatever you took won. Right? Another one down here. And we have more over here. So the key is once you train your eyes on what to look for, it's amazing. And we call it the RAS, reticular activating system. It's amazing what you can find. Now, who wants to do some live analysis? Because I know we always get the people out there, oh, you're showing it in hindsight. Well, because I'm showing you what could be. I'm not showing you this to say, hey, I'm a super trader. I'm showing this so you can see once you reach the level that you plan on reaching as a trader, it's amazing what opportunities open up for you. But I do understand people, you get a lot of that. I just don't really care. I've been doing this too long to care what anyone else thinks, because I'm 100% confident in myself, because this is what we do. So let's take a look at Euro Yen. Well, let's take a look at Euro Pound first, because this is one that has an advanced pattern formation on it that I'm using for something else. We're going to start on the daily. So Euro Pound daily, if you're following along. And we're going to delete all this stuff. So we go through a 4-step process here at Tier 1 Trading. Just like we talked about routine and checklist, we go through a 4-step process in trading called IPDE. Look at that, Max is ready, my man. IPDE stands for identify, predict, decide, execute. This is a very crucial part in doing consistent analysis. Now, what do you think I want to identify? What does identify mean? Identify the trend. Yep. Not necessarily the pattern. Create a bias. Naomi says, what are we doing? What is the market doing? Matthew says, market structure. Yeah. I want to ask myself the question, what is the market doing? What has the market done? Where is the market at? So in this particular situation on the Euro Pound, right, I can say that the market price has come up to a level of previous structure resistance. And what has that previous level of structure resistance done? Has it been violated? Has it held? It has held. Based on the information, knowing that it is held, I can then go to the next step of my 4-step process, which is the P, which stands for predict. If I identify that a level of previous structure has held, what is something that I can predict? Well, I can't necessarily predict the continuation in trend, no, because we haven't violated that level. Can I predict a potential reversal? Yeah. Perhaps we're going to see a potential reversal. So I know 2 things from here, right? If I am a trend trader and I'm predicting a potential reversal, am I interested? If I'm a trend trader, someone that trades the trend, and I'm predicting a potential reversal, am I interested? No, not at all. However, if I am a counter trend trader, well, as Steven says, why? Because if I'm a trend trader, I only want to be involved in the trend. If my prediction is that the trend will not continue, is it something I want to be involved in? Those are good questions, guys. And again, it may seem silly. This is something that I struggled with. Again, I told you I was a trend trader, guys. When I started trading, I was trading a trend continuation strategy, and I couldn't identify a trend. So it's not a dumb question at all. I lived it. I traded this strategy for years without truly being able to determine a trend. So one of the, and again, I laugh at myself. One of the key factors I need to recognize is this. If I'm a trend trader, I need to be in a situation where, if I'm a trend continuation trader, I need to be in a situation where I expect the trend to continue. So if I identify that previous structure has held, the level in which I need to see violated in order to predict the continuation of trend has not been violated and it has held, I don't necessarily want to be a trend trader. So if I'm a trend trader, I'm staying out of it. No interest, on to the next pair. If I'm a counter trend trader who's looking for reversals, now maybe this is something that's more interesting. Right? So as we dial down, I'm going to go a little bit quicker with this. As we down to the 240 chart, I see that the market is putting in a potential reversal pattern. Now, I don't expect all of you guys to notice, especially if you're brand new, but what's forming here is a classic reversal pattern in the market called a head and shoulders. Have you guys ever seen that before? Could be a potential site for you. You guys ever heard of a head and shoulders? It's a classic reversal pattern. I'll draw it out by hand before I show you guys in the chart. But it's when the market does something like this, right? The market is in an uptrend, right? And I think we can agree that we were in an uptrend here on Euro Pound. Would 100 out of 100 traders agree? Yeah, right? What did Akil say was the basic rule, right? Very basic. Bottom left to top right. Darn right we're in an uptrend. But a head and shoulders pattern is something that forms when we're in an uptrend, and basically the trend has come to an end, right? The trend is your friend until it ends. And what it does is it puts in a formation that looks like this. It puts in a lower extension typically. We get a very deep retracement. We get a move like this where the market refuses, right, to violate our previous structure highs. And then we start to see a reversal. Make sense? Just the basic concept. Again, we're not teaching this right now. It's always tough doing live trading because I trade so many ways, and I try to do it in a way that's not going to confuse many of you guys. But just, does that make sense? The basic concept, the trend has ended. It's exhausted, right? So that's what we're seeing right here. We're seeing the market move up. We created that left shoulder. We have our head right here. Keep in mind, this is the head that tested previous structure highs. We came back down. We have that deep retracement right to this level. This is what's going to be called our neckline of the head and shoulders. Right? You can connect the dots there if you want. And what we're currently doing is we're putting in a right shoulder. Now, I don't know if this is going to be a valid head and shoulders until we violate this neckline. And violating this neckline would be no different than what? Violating that outside return. So when I trade head and shoulders, I prefer to wait until the violation and then look to get involved. But we have something interesting happening at this area. If we dial down to a lower time frame, right? So if we go down one more time frame to the 60, we actually have something pretty interesting happening here. And this is good. This is a good example of combining analysis. All right. If we isolate this, I'm going to bring on my pattern tool just to make life easier for me. Following up on our conversation on advanced pattern formations, here's what we had this morning. X to A to B, B to C, and we get a CD completion right here. Right? 91.82. This is a bat pattern. Now, there are many ways you can look at this. You can trade this as a bat by itself. If you did, it would have hit targets already. Something you can do as a trader is you can combine your analysis. This bat pattern completion also occurs where? Think about the bigger picture that we just talked about. Also occurs where? And again, if you're newer, just sit and watch. This is probably a little bit more experience. I don't want you guys getting overwhelmed. It appears at the right shoulder, or what we would project to be the right shoulder. So what I did this morning, I'll go back to the 240, was I used this advanced pattern formation as an opportunity to get involved aggressively into a head and shoulders pattern. You guys see this? This is called combining strategies. It's something that you can do as you kind of gain more experience in the market. I'm taking a strategy, which is advanced pattern formations, which I showed you on the lower time frames, which you can use in consolidation in its own right. I'm taking advanced pattern formations. Again, I'll go back down to the 60 and show you. And I'm combining it with my overall analysis and using it as a way to get in for a bigger trade. Does that make sense to everyone? And again, the whole theme of this is to show you that anything is possible in trading. And the goal of trading is to make it yours. The goal of trading isn't to trade like me. It's not to trade like Gabby. It's not to trade like Charles or Jason or Darren or Anthony. It's to take all the concepts that we teach, right? We don't just teach strategies. We teach philosophy. It's to take all the concepts that you teach. And once you become a well-rounded trader, you can use these different tools in different ways. It's not just like, hey, I have a hammer. I can use this hammer for one thing. All I can do is hit nails. You could use it for many other things. And in this scenario, I did take some profits off the board, but I kept a partial position on for the bigger head and shoulders pattern, for the projected reversal, which I would expect to come down to this level and come down to this level. And so far, it's off to a good start. We need to see it break this neckline. That would be a very good sign, breaking this neckline. But at this point, the market is moving in my direction. I'm not sure if you guys caught it, but I did roll my stops to break even. Do you know what that did? What did moving my stops to break even do? It took away all the risk. Not only does that help me financially, not only is this already a profitable trade, I cannot lose money on this trade anymore, but mentally it's helped me. Because one of the things that gets a lot of traders in trouble is they see the money and they start freaking out. Some of you are freaking out right now, I bet. How many of you guys were watching this and we were down here fighting the 91 even handle, a very high psychological number, and you're like, Q, you were up 75 pips, and now it reversed, and look at that long wick, and now you're only up 50. Admit it. How many of you guys did that? How many of you guys are freaking out right now? How many guys, if you were in this position, would have just, I'll take the rest of the profit off the board? Do you see how calm and collect I was? I'm calm and collect for a few reasons. One, I completely trust myself and my plan as a trader, right? There is no individual, like Jason mentioned yesterday, there's no individual trade that has any effect on my trading. It's all about consistent execution over time. This trade means nothing. It could be the biggest winner in the world. It could be the biggest loser in the world. It means nothing. Zero emotional investment in this trade. That's one. I understand that. And that takes time. Again, this is easier said than done, but this is the trading psychology time. This is shifting the thought process from outcome over process to process over outcome. This is a good trade because I followed my rules. And I know if I consistently take good trades, I'll be on the right side of things. But something that helps, especially for newer traders, is putting yourselves in a position where you can't lose. One of the hardest things to deal with is not only just being up money or what you think is up money. You're not up money until you actually exit the trade. But one of the hardest things to deal with as a trader is being up money and then watching that money go away, right? What's even harder than that is when you're up money You watch that money, which you think is yours, go away. Your stop loss is still above your entry, and you know that there's the opportunity for you to do what? For you to lose money. Let me know if you've ever been in this position, right? Let's say this thing reverses. Let's say I didn't roll my stops. Let's get this off the screen. Also, personally speaking, here's a word of advice. Live room members, you know this. I never watch open P&L. So if there's anything you take from this, never watch open P&L. This will drive you crazy. 42, 43, 41, 43, 42, 45, 40. It'll just drive you nuts, right? Out of sight, out of mind. I don't like looking at open positions. All my live room members know that. I don't like looking at it. It's like a perfect game in baseball. Just don't talk about it. Right? I don't know. You guys are baseball fans. Perfect game. Just don't talk about it. But one of the hardest things to do is this, right? So the entry is here. Let's say your stops are still back here. And let's say this thing brings you into 100 pips of profit. You're doing the money dance. Money, 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 money. Money, right? And then, right, you turn around and you see this, right? If you're like me, you close your eyes when you dance, right? And you make a weird face. It's cool though. And then you turn around and you see this. Oh no. It's reversed. And then it reverses to the part where it sucked up all your profit. You're back to break even, and now you're in the negative. What do you think happens now? Rather, let me ask you guys this. What do you think would be the right choice? Yeah, no more money dance. I see get out. I see reversal. Wait. If you said wait, if you said get out, you're wrong. Your stop loss is there for a reason, is it not? Why would you get out before your stop loss is hit? If you get out before your stop loss is hit, and again, unless you have a very specific reason to do so based on your active management plan, you're basically telling yourself that you had a bad stop loss to begin with. What you should do is stick to the plan. But what most traders do is this, most new traders. Market will creep up and you'll say, you know what, you just need to give it a little bit more breathing room, right? You ever been there? A little bit more breathing room. You ever do that? I'm just going to move it up a little bit. Keel talks about these psychological numbers. If they end in zeros, you got to avoid them. A little bit up here. And then the market creeps up a little bit. And you're like, oh, you know what? 92.50s. Got to get above 92.50s. That's a strong psychological number. I'll probably hold a little structure looking left right here, right? We'll justify by any means. A little structure looking left. Get above that structure, right? Before you know it, you're up here. Market starts doing a little bit of a reversal. You're like, oh, see, look, I told you. 92.50s, 50, right? And then it starts doing this. And you're like, oh, you know what? Bigger structure, right? We know that a head and shoulders technically isn't invalid until the head is broken. And then, and then before you know it, you're stopped about here. And what's the difference? Some of you guys are like, well, I'm stopped out one way, I'm stopped out the other way. You want to see the difference, right? A stop from here to here, you lost 45 pips. A stop from here to here, you lost 166 pips. What's the difference? 120 pips? What's the difference? 3 trades like this, you basically took 4 losers or 3 losers instead of 1. Now, let's say you set yourself up in a position where your average win is bigger than your average loss, which is how it should be, unless you have a very, very, very big win percentage. Let's say your average loss is 45 pips, and your average win is, shoot me a number. Your average loss is, let's say, 60 pips, or your average win is 60 pips, right? That's a pretty good position to be in. Until you do something stupid like this. Because now you have to win 3 times, essentially, to make up for that 1 loss. Where before, 1 win would make up for your 1 loss. Now you're screwed. Because the only way for you to get better is to have a higher win percentage. And I'll tell you what, if you're consistently trading a strategy, your win percentage isn't going to change. I hope you understand that. Your win percentage typically is what it is, right? I've been trading since 2007, Forex since 2009. I am always between 45 and 60%. I'm typically about 55%, right? When things are going bad, I'm about 45%. When things are going good, I'm about 60%. I will never be a 90% trader. I'm not all of a sudden going to boost my win percentage that high. I make profit off of keeping my losses small and making sure my wins are bigger. So if you consistently dig yourself in a hole of making your average loss 3 times worse than it's supposed to, what's the solution? How do we get out of that hole? Imagine like in quicksand. What do they tell you not to do when you're in quicksand, right? The first instinct, right? Going into de-stress, right? Stress versus de-stress, right? My first instinct, if I'm ever in quicksand, because I was born in the city, I'm not good with like nature and jungle stuff, is I try to fight. I panic. I'm just going to move my hands and my limbs harder and faster. Now, this may just be from the movies. I don't have any experience in real life, but what happens when you do that in in real life in quicksand? If you panic and move faster, you typically sink even deeper, right? In trading, the mindset's often this. Okay, I just had that big loss, so the next time this happens, right, I'm just going to make my win bigger. Right? Instead of taking my normal profit here, right? I'm gonna let it ride, right? Any of you guys let it ride? I'm gonna let it ride and take bigger and shoot for profits down here because I gotta make up for that last loss. And unfortunately, I'll let you guys tell me what happens when you do that. What happens when you shoot for bigger profits than you're supposed to? What happens? What happens? Well, the market does this, right? The market comes down. It takes what your normal profit would have been, but you don't take it because you're shooting for this home run trade because you got to make up for that big loss. And then the market reverses. And then boom, either you have a break-even trade, a losing trade. Either way you look at that, you miss profit because you were shooting for more than what you were supposed to shoot. Sound familiar? John says this happened this morning. Yeah, you put yourself under pressure, and not even to mention that. The more pressure you're on, the harder it is to succeed. One of the things, someone mentioned earlier, they love my transparency about being a 50% trader. One of the things that I love about being a 50% trader, and one of the things that I love about knowing my strategy and know where I'm at, I don't have pressure to win. Do you understand that? There's a lot of other pressure and stress in trading. I have no pressure to win. I know I win about 55% of the time. So I don't have pressure. I mean, I couldn't imagine needing to win 90% of the time to be profitable. That is hard. That's 9 out of every 10 trades, 90 out of every 100 trades. If I take 100 trades, guys, I'll be profitable if I win 40. That's a lot of pressure. I mean, that's a lot of relief. It's like a baseball player. You'll be a Hall of Fame baseball player if you can hit the ball 3 out of every 10 at-bats. But they don't teach that out there. They teach high win percentage. High win percentage feeds the ego. I mean, historically, the best traders of all time, especially if you're a trend trader, like Richard Dennis and the Turtle Traders, they're like 30% winning. Did you guys understand that? 30% winners. So we have to flip what's important, and I hope you guys understand that. It's not necessarily the wins and losses that are important. It's the sabotage yourself. And these are the problems that many traders are making. So I didn't mean to get down this path. I apologize, but it was good stuff. I was just supposed to be doing analysis for you guys, but this is what trading is, man. This is what trading is. And the best thing you can do in this situation is this. You see this chart right here? Whoop. There's another one right here. Okay. Well, it was supposed to go away and you never see it. But there was another one there. But yeah, just trust yourself. Anybody read the book Pitbull? We're gonna go to Euro Yen next. Anybody read the book Pitbull? Not the rapper, pop star. Fireball. Fireball. Yeah, we'll get back to the IPDE, Jack. I got Shiny Thing Syndrome, and I got off track on a whole different avenue, but I think it was worth it. But Pitbull by Marty Schwartz, good book, great book. Made me feel a lot more comfortable about. I don't want to say I failed at money management because I was really good until I made that massive mistake. But it made me realize that even the best traders in the world don't make great money managers, because it's again, my situation was a little bit different because I was spineless and I gave in to my client, even though when I knew it wasn't the right thing to do. But one of the cool things in his book, he got a note from an experienced trader. And the note said, basically, he said, understand that about 90% of the work is done before you ever enter a trade. And that really hit home for me. And it's true. 90% of your job is done before you ever are involved in the trade. You guys understand that? This is a Ninja Trader, by the way. And the pattern software, this is something that comes with our subscription. It's called Enigma. So it's a pattern recognition software. So if 90% Pitbull, P-I-T, one T, P-I-T-B-U-L-L by Marty Schwartz, big orange book. It's a good read, really good read. It's not like a trading education book, it's a story, which I get more education out of those books than other ones. But yeah, 9% of your work is done before you ever enter a trade. And that means your analysis. That means formulating your plan on how and why and if you should enter. That means putting your stop loss in an appropriate position. That means putting your targets in an appropriate position. The only thing left, that 10% that's left, that's trade management. But if you can understand and trust yourself enough before you enter the trade, it's going to give you this confidence so you don't make those type of errors. And it comes with experience as well. But it's a good book, Pitbull. This is Ninja Trader I'm on right now. It's my preferred platform, partially because I have a lifetime license and I haven't paid a dime in like 10 years for it. But let's look at another opportunity here. This is the Euro Yen. So let's go back to kind of an IPDE process. I didn't follow through with it because I got distracted. But let's identify what has happened here, right? So here's our previous structure low, this stinking apple wick, right? What have we done at that level? Have we held that level? Have we violated that level? We have violated that level. That word sounds so bad, violated. We have surpassed that level. That's better. We have violated that level. So, seeing how we are in a bearish trend, a violation of that level should allow us to predict what? Trend reversal, trend continuation. You guys are getting it. You guys are getting it. Trend continuation, right? So right now, this is my higher time frame, the daily. Right now, I've already made up my mind on what I'm looking for as a trader, right? Essentially, there are two options when you trade. You can get long, you can get short. I guess you can stay out as well. But if you're going to trade, there are two options. You can get long or you can get short. We waste a lot of mental space battling between the two. Oh, these are reasons I should get long. Oh, these are reasons I should get short. Long, short, long, short, long, short. Waste all this energy bouncing between both. What I've done right now, based on my rules for identifying a trend, based on what I identified in the market, when I go to make my prediction, it tells me what side of the market I should focus on. Audio is breaking up. Okay, give me a second. Oh, it's better now. Weird. I'm blaming Charles. Probably Charles. Okay. So did you guys hear about where did it leave off at? About the prediction? Is that when it started jumping? Stop downloading your torrents in the background. Okay, so we identified that price has violated this level, correct? A violation of this level tells us what? The trend is likely to continue or the trend is likely to reverse. The trend is likely to continue, right? So that is our prediction. We've identified that the level has been violated, an important decision point has been violated. We've predicted that based on seeing that that level has been violated, yes, this is the daily. Based on seeing that that level has been violated, we predict that the trend is likely to continue. So right there, what I've done is I've eliminated half the junk from my head. Again, whenever we look at a chart, there are two ways that we can trade. We can buy and we can sell. And what typically happens is in our head, we bounce around between both, right? You guys ever do that? You look at a chart and like, well, this is how I can buy, but this is how I can sell. And this is how I can buy. Ooh, but this is how I can sell. And we're wasting energy splitting between those two things. What I want to do as a trader is I want to identify what single direction I should be interested in and delegate all my focus to that direction. Does that make sense? So when I look at this, based on identifying the violation of previous structure lows, based off that allowed me to predict that price is likely to continue lower, I am only focused on trading in one direction. What direction is that? Bearish. So my full focus is on bearish. Now, when it comes to making predictions is a three-part process. The first is, what is the market likely to do? The second is, where is the market likely to go? And tier one traders, this is your time to brag. What is the third? What is the market likely to do? Where is the market likely to go? And how is the market likely to get there? Now, very important. Someone write in, how can I get involved? We're not even worried about that yet. That's the fun part. We're not even worried about how to sell. We haven't even, this is part of the process, right? We haven't gotten to that part of the process yet, have we? We're trying to figure out the rest of it. We're trying to figure out what direction should I be focused in. We're trying to figure out if the opportunity has enough legs for me to get involved. We can worry about how to sell or how to buy later. But this is where many traders get caught up. They look at a chart and the first thing how do I sell? Do you realize that how do you sell is the least important part? Let me ask you guys this question, right? If I told you how to sell, but you couldn't predict which way the market was likely to go, does that sell have any purpose? No. What's most important is identifying the most likely direction of the market and understanding where you predict the market to go to. Because guess what? Predicting where the market to go to is going to tell you about your targets. Telling you about your targets will give you an idea of your risk reward. If you do not know your risk reward, you don't know if this is a good trade or not. Charles says, how do you sell? Using a sell order. Boom, pow. He's that guy. Boom. So, we already predicted what price is likely to do. Now, the next part of our prediction is where is price likely to go? For that, we can look left. We haven't talked about structure at all today. We're not going to, so don't worry about this part. But I look for key levels of structure. Here's our next key level of structure right down here, right? 116 even. Don't worry about why that's key yet. Why I chose 116 even versus 114.77, just because we haven't learned about structure, so it's not going to make sense. But understand, this is my prediction. If we're likely to go lower, then I predict that we're likely to go lower to this level, right? So that's our where. You guys with me? What is price likely to do? Where are we likely to go? And then, of course, how are we likely to get there? Now, the how is interesting because there are two ways price can get there, right? One, we can just go straight there. Boom, it happened. What's another way we can get there? Does the market sometimes it moves straight? Don't get me wrong. We saw that with the euro pound, right? Straight down. Or we can ebb and flow, right? We can kind of, again, this will look smoother on a lower time frame on a daily, so it's all scrunched up. We could do something like this, right? Does that make sense, guys? Those are the two ways we can get there. We can go straight down, or we can kind of zig and zag. And at this point, what I want to do is I can plan for how I enter each. If I'm a breakout trader, I ask myself, okay, how can I get involved in the breakout? And this is the decide part. So identify, predict. Now we want to decide how we're going to get involved. So let's drop down to a 240, 4-hour chart, right? Now I'm going to ask myself, how do I get involved, right? Because I know where I predict the price to go to. Because I know this, I can set up my risk reward. Now the decision on how I'm going to get involved is based off of the type of trader I am. If I'm a breakout trader, I can get involved in a breakout. If I'm not a breakout trader, can I get involved in a breakout? No, because it's not in my rule set. I may need to wait for a pullback trade. If I'm a counter trend trader, can I get involved in this trendy move at all? No, but what can I do? Well, if price action comes down to this ultimate destination, then I can look for reasons to get long here for a counter trend move, right? We didn't talk about it this week, but it doesn't matter whether you're a trend continuation, you're a counter trend trader, you're looking to get long, looking to get short. Analysis is the same no matter what. The only difference is how are you going to use it. So we'll give you an example of some opportunities to get involved here. Here's what I'm looking at. So we actually have another simple pattern setting up here. This pattern is called not a flag, but close. Not a falling wedge. Nope, but close. What type of triangle? The type of triangle matters. This is a descending triangle. And this is a myth. This is a myth breaker, right? How many of you guys have ever heard that the more time structure is hit, the more powerful structure is? Really, you haven't? Good. I heard that a lot during my when I was. I'm going to date myself now, but when I was learning to trade, I heard that a lot. I always heard, you know what? The more time structure is tested and the more time it holds, the more powerful that level is, and you should buy, right? And probably about, I don't know how long, maybe 5-6 years ago now, I started realizing it's the exact opposite. We were talking earlier before we started about a real estate deal I did in 3 days because we have a very hot market, right? Any real estate investors here? Or anyone that sells any type of product, I should say? Anyone that goes to the supermarket, grocery shopping, right? Imagine your favorite product at the supermarket. Mine is milk. Because we got 2 kids and a wife that eats a lot of cereal, and they go through milk like it's nothing, right? Just for men. Yeah, just for men. Can't get enough of it. Still not working, but I'm not losing faith. Imagine your favorite product on sale for half price. Do you snatch it up quick or do you wait? You're walking by and you're like, wait a minute, 50% off. And you check it, there's nothing wrong with it. What do? Do you go around the supermarket and I'll come back to it later? Or you're like, oh, hold up, snatch 2, right? Good deals don't last. Same thing real estate. I learned this the hard way. you got a good deal, it goes quick. If you're selling a product and it's a good product and it's for a really good price and the demand is there, it's going to go quick. The markets are the same way, right? Powerful levels of structure. Do you think price hangs out at those levels for a long time? If there's a lot of buying interest at this level, do you think it's going to hang out? You think the buyers are going to be like, oh yeah, I really like this level to buy, but we're just going to let it, hang out a little bit? Hell no. They're buying it up. For you guys that are familiar with supply and demand, that's what we talk about when we see supply and demand zones, right? They're kind of like quick V reversals. This is just the RSI, Relative Strength Index. So when I see something like this, this is actually a classic pattern formation as well, but this is a sign of a potential bearish break. Now, doesn't mean that's going to break bearish every single time. No, nothing works 100% of the time, right? I'm talking to Naomi this morning on the chat about trading being an art and a science, and 2 + 2 always isn't 4 in trading, unfortunately. That's kind of the difference. Math don't lie. In trading, math does lie. So, but I would anticipate a break to the downside. And another example is, think about this like a bouncing ball, right? So you drop a ball from here. What happens on the first bounce? Pretty decent kind of recovery, right? What happens on the second bounce as it falls from a lower location? Does it bounce up higher or shorter, right? The trend continues to get, or the distance continues to get smaller and smaller and smaller. You can think about the same thing with buying and selling pressure, right? Think about the pushes down here are what? Is this buying pressure or selling pressure? Selling pressure. And the pushes up here, is this buying pressure or selling pressure? This is a gem of a session, guys. Sorry, random thought. We're killing it. We are killing it this morning. And this was not planned, but we are killing it. Love this stuff. Golly. This is buying pressure down here. So I asked you guys this question. Is the buying pressure getting stronger or weaker? It's about the same. It's not getting weaker. It's about the same. It's about the same on the bottom, right? They're protecting the same level. However, as they push up, they're losing ground each time, right? The sellers are pushing it down at a closer and closer level. So I guess in a way, whoever said weaker is right. I wanted to term in a different way. But yeah, the buyers, each time the buyers try to push up, they are having less and less success, right? Less and less success. Now, I don't know about you guys. If I'm trying my hardest to do something, and each time I put forth effort, and I continue to have less and less success, do I keep trying, or do I eventually give up? I eventually say, you know what, man? Let's cut our losses. Let's live the fight another day. We were talking about real estate. I had a property that our first property, I very emotionally invested. And no, I shouldn't have been, but we were. Or actually, my second property. And it was bleeding us money for like 5 years, and we just kept trying to band-aid and fix it. There's so much going wrong, and we finally just gave up on it. And we just had to let it go. We know fight another day. And you see the same thing here. So in this type of pattern formation, what you typically see is the buyers will give up. And you'll see a breakout to the downside. Now, if you're a breakout trader, there are a few ways to get involved. I teach 3 ways, right? One way is prior to the breakout. This is an aggressive way, very similar to what I showed you with that head and shoulders pattern earlier on the euro pound. You kind of get in aggressively before you're anticipating the breakout. You get in that kind of one of the best possible positions, the cheapest position you can say. That's one way. A second way is getting involved during the breakout, right? As the market breaks out, you say, hey, I'm going to put some orders down here, a sell stop order. If we break out, boom, I'm reaching a hand out. I want to grab that train as it's rolling. The third way is waiting for the breakout, waiting for a pullback. Someone mentioned this, waiting for support to become resistance, waiting for the pullback, and then looking to get involved in this type of move in an anticipation down. And what's cool about this, guys, right? This is the decision process, obviously, and then the execution is actually placing the order and placing the trade. What's cool about this, guys, and what should bring you comfort, right? This is analysis that we've done today, right, in the last half an hour or so. The trading opportunity hasn't happened, but we've already mapped out exactly how to handle this situation, have we not? David says, but the same pattern also has a certain percentage to be a reversal pattern. No, it does. Anything, yeah, this is not 100%. This is not 100%. So can this break out to the upside? Yeah, we saw one with the pound Canada last week where similar situation, predicted a downside break, we broke to the upside. But we're playing a game of probabilities. If I gave you this pattern, who's it, David? If I gave you this pattern and I said, David, 75% of the time, this pattern breaks out to the downside. 25% of the time it fails. And these are random numbers, guys, just random numbers before you guys start going out here and trading it. If this pattern breaks out, 75% of the time it breaks out to the downside, 25% of the time it breaks out to the upside. Do you like those odds? Now, what if I told you that your win, your average win, is also more than your average loss? Do you like those odds? This is going to get into expectancy, which we're not going to teach, but yeah. So basically what you said is this. You've put yourself in a position where the odds of you winning are greater than the odds of you losing. You've also put yourself in a position where when you win more than what you give back to the market when you lose. This is the ideal trading situation. And your job is simple, right? Unless you're ego driven and you care about catching every win, your job is simple. Trade it every damn time. Because you're gonna win more than you lose, and when you win, you're gonna win more than what you give back to the market when you lose. The only thing I would want more is of these patterns. How can I get more of them? How can I increase my portfolio and get more? That's the only question I would have. Give me more. Give me more. What other pairs can I test? Give me more. What other time frames can I trade? Give me more. Because this is a money printing machine. I've been watching Money Heist, so I'm all about the printing money and robbing mints now. But seriously, give me more. But this is how you set yourself up as a trader. And what we've just done here, guys, is we've already decided on what we're going to trade and how we're going to trade it before the trading opportunity ever happened. And this is something that you could have identified days in advance. And now all we do is wait. We're predictive in our analysis. That's what we've just done. We're reactive in our execution. We wait until our specific signal to get involved. And if we get that specific signal, then we enter the trade. This is trading. This is professional trading. This is organized, disciplined, professional trading. This is what it looks like, and this is what you need to be doing every single day. You got me? Perfect. We're going to take a 15-minute break, guys. We're going to either load up Charles or Jason. We'll see what is happening out there in the world. I appreciate you dealing with my randomness of bouncing back and forth. I thought it was a great session. And the next session is going to be even better. So I'll see you guys in 15 minutes, and I appreciate it.